We're seeing barring the Taiwanese index, which is just above the flat line.
249 applications are there, and we are working day and night to complete the entire process at the earliest possible time.
So you got a 40-odd point bump in the word go. That's the indicative opening as far as GIFT Nifty is concerned. Positive start, but mildly so. Nifty Bank just flitting between green and red.
AI is here. Is the business model broken? No. Is the valuation crazy? Yeah. Yes, it's crazy.
What we have done is we have, as was also suggested and indicated by the government, we have passed on the entire benefit.
Nifty at the day's low. We started on the back foot, and that has continued to be the case as well.
In Q2, they reversed about 195 crore, which is higher than 88 crore that they reversed in Q1.
Our team has been regularly in touch since 9 a.m. in the morning with the exchange. But till now, there is no resolution which is in sight.
Reappointment of trustees for life has to happen unanimously.
After falling around 120 points from the day's high, we have recovered around 120 points from the day's low as well.
Okay, well, that's the day so far. Market's down about 150-odd points. Market breadth is slightly negative. So sideways across most indices except areas like metals, which are buzzing a little bit. This is Closing Bell. We are coming to you from the CNBC-TV18 News studios. I am Prashant Surbi. Reema with me here in the studios. Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, good afternoon. And the picture is vastly different from the open. We were up 40 points at open, and now we're down close to about 150 points in the Nifty. The Nifty is at 25,800. And the last 1 hour in particular has been extremely volatile. So that monthly expiry seems to be playing out. Well,
yeah, absolutely. If it's any consolation, I mean, we're not alone in this today. It's a general day of profit taking across global equities. I mean, whichever market you're looking at. Most of the European markets that are trading, the CAC, for instance, they're down not too much, about 0.25%, in sync with the kind of declines that we've seen. US futures are absolutely flat. That is the indication at this point in time. And many of the Asian regional markets as well, our neighborhood markets, they've had a day of profit taking. The Nikkei ended down about 0.6%. The Hang Seng was down. The Taiwan market was down. So in general, a bit of a profit taking day playing out, at least for now. Nigel?
Well, that's right. It's a typical expiry day. But I'll tell you what, this will still be the best series that we're going to be bracing for. It's close to around a 5% gain on the Nifty, which is the best all the way since June 2024 series. So we're going to end well, but for today it's an extremely volatile trading session as we pull the curtains down on this series itself, the October series, which has gone to the bull. So let's see how the last 60 minutes pans out.
Absolutely. We got lots of individual shooting stars once again, which is what we'll focus on and get you updates on as we kind of go along. But let me just quickly run you through what's coming up here on the show today. So we will, of course, decode the moves. Final hour trade, volatile session ahead of F&O expiry. PSU banks are enjoying an upbeat session. IT is the space where I think there are more losses, which you can see. Stocks that's making the headline, MCX, the technical glitches, and I mean, I think one of the longest ever glitches where the exchange did not open, not through its main servers here in Mumbai or the disaster recovery side, but trading is now underway. Actually, stock slipped a little bit more after the trading started. And this is the second such instance in about 4 months. So more details with Manisha in a bit from now. Tata Steel and a few other stocks from the metal space are seeing some attention. That's the metals pack. Some brokerage upgrades. So Nigel gets us that in just a bit from now. And a strong showing in the second quarter is sent the shares of Indus Towers higher. We'll get you sort of takeaways from the conference call that I think gets underway now as we speak in a bit as well. Car Trade is the big mover. TTK Prestige is rallying hard. So earnings fine print on both those coming up in just a bit as well. So that's the overall picture as we begin this Tuesday's afternoon session. Okay, well, let's just quickly run you through what to do now in terms of specific trades. Mitesh Thakkar is with us to help us with that. Mitesh, good afternoon. Welcome back. What would you recommend?
Good afternoon, Prashant. Well, as I said, till we break this 26, 150, 220 zone, I think you will still see some kind of, volatility. The market could have come back to 25,800, which is my first support area. We are not very far away from that, actually. Just about 20 odd points. But in case you break that, the pullback will be slightly deeper to about 25,600. I think looking at the short to medium term structure, I think that should be the end of decline. So the bias is on the upside, but tactically we are not ready to show, or we're not showing strength to get past and break into fresh all-time highs. So I think that might take a few more days, and this sharpness might continue. So for index traders, I think you can take a trade at 25,800 with a 50-odd point kind of stop loss, or wait it out till about 25,600 in case we go there, which is something which I'm still debating. But yeah, I think around those levels, I would be aggressive buyer into the index. For the timing, I have one buy and one sell call. On the buying side is UPL with a stop at 685, buy for targets in the range of 720 to about 725, and Hutco is a conditional sell. If it breaks 224, take a short with a stop at 229 and look for targets of 215.
Okay, all right, got it. Thank you for that, Mitesh. We'll come back to you a little later for some more trading ideas. Let's track some of the movers and shakers today. I mean, stocks that are moving on news flow or on earnings. Some of them, HOEC is an interesting one. HPCL is saying that HOEC provided the kind of crude that caused corrosion at Hindustan Petroleum's refineries. That stock's been down about 6%. There's going to be a charge as well at play because of that dispute that seems to be rising. Vodafone Idea has reversed yesterday's excitement. It's down about 5% as we speak. And then there are a whole host of result reactions that have not gone down too well, starting with, of course, Bata itself. Gurmeet Chadha of Complete Circle is with us to make sense of the market's mood. Gurmeet, I outlined some of the negative stocks, but let me open with the positives. There are enough movers on the green side today. IDBI Bank, there's excitement. Not sure if it has anything to do with the reports of, maybe more FDI being allowed for PSU banks or not. There's NetWeb, which is back to its winning ways, 7%. And some of these wire and cable stocks, RR Kabil, same time yesterday was up 5-6%. Again, it's up 6-7%. So let's get your thoughts. Maybe NetWeb and an IDBI Bank, since there's so much excitement.
So I think banking has got to do more with the more expectations coming. I think there've been different reports of 49% FI stake being allowed, also having a relook at the voting rights, capped at 26%. Private corporates might be allowed to go beyond 10% on a case-to-case basis. A lot of things loading as far as banking is concerned, and that's why you've seen a rub-off. And we've seen the infusion of $7-8 billion in host of companies. I think that's helping. I think on the new age businesses and things related, I think it's more that in an earning season where you have single-digit earning growth and probably better, anything which is growing faster is getting a lot of excitement, and it's happened with a lot of new age companies. Today, Cartrade, for example, the stock has done very well. The profits have doubled. I think there's a big impact coming because of Navratri and festive season, and perfect operating leverage, getting played. We're seeing that with some other, so anywhere where the growth is very good. We saw very good numbers from, for example, again, not related, Chennai Petroleum, which is a refining company, stock up 7-9% today. So wherever there is good earning growth, I think market is trying to anchor towards it. And I think, which is what I've been saying for now, I think the only safe haven right now in a market like this is solid earnings growth.
Speaking of solid earnings, by the way, pull up Newgen. Stock is on a tear after the company came out with numbers. Let's pull up the intraday chart. It's up 6-7%. I think the profits up some 64%. The revenue itself is up 25%. Margins have shot up. I mean, what an expansion. There's from 14% to 25%.
But Q1 was particularly weak. So this is, it's got a seasonal element to it. And Q1, if you remember, was a weak quarter. So when you look at the numbers on a quarter-on-quarter basis, you are seeing that, additional pump up. But of course, numbers are good. Street likes it.
Absolutely. Any thoughts? Newgen, have you looked at the company, Gurmeet?
Yeah, we own Newgen, so happy with that because IT, we've been very selective in IT, underweight there. So we have KPIT and Newgen and a little bit of HCL Tech. But the weightage is, as I said, around 5-6% in the portfolio. And I think the mid-cap IT is actually showing the way and probably the ability to pivot from just a service business to align with the new challenges. So we saw that with Coforge. Persistence has done quite well, and today Newgen, although Newgen is still I think the high was 1,800 if I'm not wrong. So I think selectively, if you want to be a little contrarian on IT, I think be where the growth is coming on a sequential basis.
All right, stay on. Gurmeet, let's talk about the Indian refiners because they have cut Russian oil imports amidst all the geopolitical tensions. Sonal is here. She's going to, wrap up all the commentary that we heard from the companies about this. Sonal.
Thank you for that. Well, sources are also suggesting now that November 21st is the deadline now. Any more Russian imports coming in from there will not be taken up by the refiners. And that's an important update which is coming in as well. If we talk about what the companies are saying now on Russian imports, let's start with Oil India. Because company said it is seeking legal opinion on stake in sanctioned Russian oil fields because they do have dividends to the tune of $300 million, which are stuck because of the sanctions that have come by. So they are asking for more legal opinion which could come by on this one. As far as refiners are concerned, they have cut down meaningfully. Indian Oil Corporation yesterday indicated that they will comply with US sanctions on Russian oil. Already they have cut crude intake from Russia to 19% versus 24% on a sequential basis, and they will be flexible to source crude even be it from the US or any other geography wherever it is better for their margins overall. Reliance Industries did indicate that they will comply fully with any guidance coming in from the government with respect to Russian oil imports and sanctions that we saw from the UK and the US on two Russian majors. We spoke to Chennai Petro yesterday and they indicated that Russian oil imports are now cut from 40% to 20%. In fact, they've started importing more from the US and the sourcing mix has actually expanded to other countries as well. They also are just looking at efficiency and something that will improve their margins. Now, do remember when India started importing from Russia, the discount was to the tune of $15 to $16 a barrel, but now it has come to single digits. It's around $2 to $3 per barrel. So even if we cut Russian crude imports, it will not impact margins so much. Some of the analysts are suggesting it could be anywhere between 2 to 3%. However, Jeffries, on the other hand, says that now refining outlook has weakened a bit because the advantage that we were seeing in terms of Russian crude discounts, that will go away with. But do remember that discount has also narrowed down, so the impact will not be as much as it was expected earlier.
Sonal, thanks very much for that. By the way, Sonal, that HOEC, since we're talking about oil and refiners and oil, crude, etc., did you see that news item? I mean, I don't remember ever hearing something like this.
It hasn't happened earlier, Prashant. This is the first time you and I am hearing of a company supplying crude to an oil refiner, a state-owned oil refiner, and getting a complaint that it is not good quality. It has caused corrosion as well. Of course, HOEC is also saying that they are looking at it and the damages that have been asked by HPCL, they will respond to it soon. But yes, this hasn't happened before. So this is first time for me as well.
Yeah, I mean, we all thought oil is oil, right? But
there are different crude grades.
Yeah, no,
oil, right?
different varieties, but oil damaging a refinery.
Yeah,
and it's material. It is a very material event because HOEC is just they just extract oil. They don't have any refining, etc. I think, right? I mean, so they're dependent on state refiners to refine that oil. That's the market for them. So we'll take it forward, try and get in touch with the management as well to understand where this is at in that sense, both HPCL and HOEC as well, actually. Gurmeet, I don't know if you have a view on HOEC. I know one or two value investors who own it. I don't know what their view now is, but otherwise, the other stuff that Sonal mentioned, what's the call?
So Prashant, we have Chennai Petroleum and we discussed it some time back, more as a value play because in terms of net worth, it was at 11,000 crores. And if you see a replacement cost for a refinery like this, that would be 35,000 crore. They reported very good GRMs and the cracks they are saying will sustain in going quarter as well. No shutdown also expected now. Last quarter had a bit of a shutdown and Q1 had a larger period of shutdown. Also, they made one point, which is a little technical, is that with the ban on refined products coming from Russia by EU and other places, the middle distillate cracks tend to go up, which is good for refiners like them. And there is a shortage of refining capacity with the focus which has been there on clean energy. So let's see, it's a difficult space. One has to be tactical. And if you make quick gains, might as well, maybe take some money off the table.
Okay, all right. Gurmeet, stay with us. Let's focus on the metal stocks. They're buzzing today. Tata Steel seems to be catching investor attention, in fact, of late. Nomura, remember, they went ahead. They initiated coverage on the stock with a buy rating. InCred, after being underweight, they upgraded the stock as well. And today it's the turn of Motilal Oswal, who has upgraded Tata Steel from neutral to buy with a target price of around 210 rupees per share. A couple of points they're making. They expect Tata Steel to benefit from the improving steel price realizations, the better operating efficiencies, and strong domestic demand outlook as well. So that's point number one, the industry tailwind. On earnings, they expect the overall earnings to remain well supported by the India business, which is projected to maintain its strong momentum. While the European operations, they are saying they're expected to show a nice improvement in their performance from year on. In terms of profitability, they've given us some numbers. Motilal Oswal expects Tata Steel Europe's EBITDA per ton to rise sharply from around $8 per ton in the first quarter of this year to around $70 per ton. That is for the European operations. Now, at the consolidated level, that means that the EBITDA per ton, they are forecasting that it increases to around 13,000 rupees per ton on the consolidated basis by 2028. That compares with roughly around 8,300 rupees per ton in the past fiscal, that's FY25. Let's turn our attention now to the aluminium players. And out there is some excitement as well because prices are witnessing a steady uptrend because of supply concerns have started emerging. And now from Australia, Rio Tinto, in fact, they have flagged off that its Tomago smelter, which is the largest aluminium smelter in Australia, with a capacity of roughly around 590,000 tons odd, that could face a potential shutdown beyond 2028. The reason? Well, they say the company is struggling to secure power at viable rates once its current power deal expires in 2028. So there's uncertainty post that. Now, this development basically highlights the key challenges for the aluminium industry, even at current prices, which are hovering around $2,800 per ton. Many smelters are finding it difficult to even remain profitable because of the high energy costs. This effectively is good news because aluminium prices, well, they'll continue to remain supported by this global demand-supply dynamics, while Indian producers, they could be in a sweet spot. Remember, the cost of production is roughly around $1,800 on a per ton basis. That's what will help them generate strong margins at current prices. So a bit of a, excitement that's playing out in the ferrous players. And for select aluminium players as well, which have been strong, this is a tailwind. Gurmeet, how are you all approaching the space? The metal sector, a little tricky, but for the time being, it seems to be getting, investor attention. For Tata Steel, in, I think, 7 to 10 sessions, there are 3 notes that have come out, all 3 of them bullish. Tell us.
So I think in an environment like this, Nigel, it makes sense to have some hard asset exposure, especially commodity, ferrous, non-ferrous, precious metals in the portfolio with the kind of environment we are in. At some point of time, the money will also, capital will shift from, some of the new age AI related plays to more hard assets. So we like more non-ferrous right now. And one special situation we have is Mukan, which has been holding for a time. That's because it's really available cheap. Company is doing a lot of land monetization. They have just sold an 800 crore land parcel. Market cap is pretty low. Also, the machine tooling division has been hyped up, and that seems to be doing very well, supplying to cranes, etc. for different ports. So it's a bit of a small capex play coming there. And as I said, deleveraging of balance sheet, debt coming down, and they're targeting being debt free. So that's something we have in the portfolio.
What about car trade tech? Can you tell us a little bit about that? 17% up for the day, very strong numbers. Year to date, the stock is up 150%, 200% in the last 1 year. It's gotten re-rated. Numbers are looking good, and there has been a lot of investor interest also. We've seen in the block deals purchases by some of the marquee funds or HNIs.
So as I said, sitting on cash now, actually perfect operating leverage at play. One of the beneficiary of GST cuts and Navratri and festive season. And I think the numbers are showing probably the street is expecting another good quarter. And, as I said, in a new age business, you got to make a basket. There is a bit of a liking now because a lot of mutual funds, institutional investors had this policy of investing only into profitable ones. And a lot of these new age businesses now have started delivering that operating leverage. So there is a lot of money chasing it and moving out from traditional pockets like, some of the larger private banks, IT companies, FMCG names like the levers of the world and chasing them. So you might see some bit of momentum here. But as I said, in these cases, you may also horribly go wrong because there's no room for making any error when you're trading at such a high valuation. So better to have a basket approach. We have Eternal, we have Paytm, we have Geo Finance in the portfolio. We are adding, some of the new names which are likely to get listed over next couple of months. So we have a slightly basket approach here, and hopefully, some of it plays out.
Before we let you go, speaking of new age and technology, and we spoke about new gen, something you own, Gurmeet. I can't help but ask you about NetWeb again. Stocks up 7-8%. It almost feels like every time the Nasdaq goes up or Nvidia goes up, people don't know what to buy in India. They think, "Acha, aur kuch nahi hai, let's go and buy NetWeb again." At least some sort of a play on deep tech and AI. But your thoughts on the stock, the valuations? Let's pull up a longer chart of NetWeb as well. This year, it's returned about 64%. In the last 1 year, that is, the return is about 64%. What now?
No, we don't have it. Some of our non-discretionary portfolios have it, Sulpi, to be honest, and that's more of a client call. It's an NCR-based company, by the way. But honestly, not tracked it, no call. To me, it doesn't make sense, the kind of valuations it's at right now.
Okay, all right, Gurmeet, thanks a lot for that. Well, it's now time to highlight our Super Pro chart of the day, which is powered by Money Control Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story that's driving the markets and helps you understand why behind the what. Now, here's today's chart for you and what it means for your next market move. PVR Inox, well, that's the stock that should come up for you on the screen. As you can see, there's a rising channel pattern and a reversal from the upper band. A rising channel reversal from the upper band indicates the price is facing resistance near the trend line. Sellers dominate, causing a pullback or a correction within the channel before the next possible move. And if you'd like to access more expert-driven insights and actionable chart patterns like this one, simply scan the QR code that's up for you on the screen and subscribe to Money Control Super Pro. Plus, this festive season, well, there's more reason to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. Hormus is now joining in, and he puts the spotlight on the top movers in the market right now. Hormus.
Boy, what earnings reactions we have seen today, and the volume spike as well. Possibly the star of the day today has been Car Trade Technologies. The stock is up almost, 18% now? Yes, it's 17.5%. The biggest single day gain since November of 23. And the street may have had a bit of an inkling about how the results are going to be, because of the fifth straight day of gains. The stock was up almost 5% yesterday as well. If you remember, last month on the 10th of September, JM Financial had downgraded this stock. The stock had declined 10% that day. And from those levels, the stock is up almost 30%. Now, in today's session, after the results, the stock has seen almost 50 lakh shares that have been traded today, and the 20-day average is just around 2.5 lakh shares. Now, an interesting bit here for Car Trade is that if it crosses levels of 3480, it's still some distance away, but if it crosses 3480, it will be a 10-bagger from the all-time lows that the stock had hit down back in March of 2023. Now, TTK Prestige is the other big earnings reaction. It is the biggest single-day gain and volumes that the stock has seen since March of 2022, and we have already had over 25 lakh shares that have been traded on the stock. The 20-day average is 25,000 shares. So you see the volumes at which the stock has moved after its results. As a result of this move, the stock has moved above all of its key moving averages, but still an underperformer this year, was down 10% so far, and last 2 years the returns have been zero because it was up 10% last year. The third one being Chennai Petro. Of course, the stock was up 8% yesterday, then came off those highs and ended in the red, and today having a fairly good day, up 9% now, extending its gains. Now, the stock is still, the volumes in today's session are still lower than what we had on Monday, which was yesterday. I had close to 1.3 crore shares that have been traded on Chennai Petro. The 20-day average is just around about 21.5 lakh shares, so almost around 5 to 6 times higher compared to the 20-day average. The stock is up 17%, was up 17% last month, and is extending those gains this month as well, and has taken the year-to-date advance to around 33%. As an underperformer last year, but the stock had more than tripled in 23 and doubled in 22. So it's done fairly well over the last few years. And lastly, Kirloskar Oil Engines, the fifth straight day of gains for this one as well. But over the last 9 days, the stock has gained in 8 out of them, almost 16% in this 9-day period that the stock has moved. We have had 35 lakh shares that have traded today. The 20-day average is just over a lakh, and the stock is above its 50-day moving average, and still an underperformer this year. But over the last 4 years, the stock is up 5x.
Hormus, thank you very much for that. So that's basically the buzzing stocks, the big movers this afternoon with Hormus as always. Nikhil Ranka is CIO, Equity Alternatives at Novama Asset Management. He's with us. Nikhil, good to have you with us here. Thank you very much for joining us. So is there clarity on whether the market's breaking out, taking out prior highs on the Nifty, Nikhil, or once again, things are starting to go sideways after a good run?
So good afternoon, Prashant, and thanks for having me on the show. So Prashant, the last time I was there on the show and markets were closer to 25,000 levels, I have clearly highlighted that, when we were discussing the underperformance of India with respect to other emerging markets, that one of the key triggers for the emerging markets to move was whenever there was certainty on the trade deals with Mr. Trump. Those markets had seen momentum and rallied. In our case, till that point of time, there was no certainty on when the trade deal would have happened. But when we started seeing news flow that, eventually we will strike a trade deal and the eventual tariffs could be between those 16 to 18%, that's when during Diwali time, we saw 5-6% up move in markets. We rallied almost from 25,400 to 26,200. If you look at the texture of that, FIs at the beginning of the month were almost short close to the tune of 40,000 crores. If you look at the data yesterday, they were net short by just 20,000 crores. So between beginning of the month until yesterday, there was almost 20,000 crores of covering that has happened on index futures, and FI selling has also ebbed to a large extent in that sense. Earlier, we used to see 3,000 crores of net sell figures every day. That is now down to 500, 600 crores. So a combination of these things has meant that we've moved 5.5%, 6% in the month of October for us. However, having said that, what we have to now keep in mind is, 60-70% of the good news on trade deal is almost there in the prices. And post the quarterly results that companies have declared, if you see the FY27 EPS for Nifty, we are now standing closer to 1280 rupees, down from 1300 rupees. So we are about 20 times on FY27 earnings, and we are still not seeing traction in terms of those 14-15% earnings CAGR for Nifty. So my sense is closer to 26,200, 26,300. This rally will again start to see some resistance. And the trading band probably will shift a bit higher from 25,500 to 26,300.
Nikhil, so that point about earnings, 14-15% still looks to be a bit of a stretch for us to achieve. What's your own expectation at Nuvama now? Do you think this demand surge that we've seen in the festive season sustains in Q3, Q4? What are you all working with? And and if you could just break it down segment by segment.
Yeah, so Rima, if you look at it, the most optimistic earnings estimate that people were expecting post the GST rationalization was for the auto sector. Now, if you look at the initial estimates for auto numbers that are going to be released 3-4 days down the line, the expectation consensus is still building close to 8 to 10% volume growth for the month of November. Which doesn't seem very, very high given the fact that a lot of pent-up demand would have come through, rate cuts were there. And, if you look at the way stock prices have moved, some of the four-wheeler names have moved from 13,000 to 16,500 rupees. They are already building in 12 to 15% volume growth when you do projections for those numbers and do reverse calculation of valuations. If November itself sees just 8 to 10% volume growth, then my sense is clearly the street will get a bit disappointed post the auto numbers that come on the 1st of November. Also, if you look at the volume numbers that have come from most FMCG companies and the commentary that we are hearing, we are not seeing very big deviation. 3-4% volume growth is still what we are working with. So therefore, I think that it's not going to be a game changer for the markets in that sense, the Q3 earnings. What we are today at close to 7-8% quarterly earnings growth rate, that might move closer to 10-11%. But I don't see a number beyond that for Q3 earnings in that sense. And therefore, my sense is we will still stay in this band of 25,500 to 26,300 till we roll over to FY28 earnings.
All right. Well, hi, Nikhil. Good to see you in. Going by what you're saying, it appears that now you're tilting more towards the consumption names rather than capex. Turning a little bit cautious on capex themes, which, by the way, have done very, very well. The government has led the way in the last 5-8 years or thereabouts. But now there seems to be some people who are taking the foot off the pedal. And you're in that camp?
So, good afternoon, Anchal. I do think that given, we will have to see the sort of revenue projections that come through after the next 2-3 months. My sense is this fiscal year, the government will have some shortfall closer to 1.5 lakh crores in terms of the direct tax collections that they had budgeted. And there's also 40-50,000 crores of shortfall that could come through because of the GST rate cuts. Given that expectations, we clearly feel that there could be some slowdown in terms of capex spending towards the second half of the year. And given the way stocks have rallied, the capex plays, the incremental upside in a lot of these names seems very, very limited. And we have to sort of remember that last year it was very heavy towards the second half. So the base is also extremely high for most of the companies for second half of FY25. So the YOY comparisons will also not look that great when companies report for second half of FY26. So clearly, I feel that some amount of caution is warranted in this capital goods place from current levels.
By the way, for TVS Motors, those numbers are looking so good. I just want to point out that there is not just great volume growth, which we know, volume growth of in excess of 20% year on year, but even on pricing, TVS has seen pricing go up by about 5%. Stocks cooling off, numbers seem to be sort of in line with expectations. There's another story that's playing out on the ticker right now. IIFL Capital could be bringing in a large PE player as well, raising some money, and we'll get to those details. Which actually, Nikhil, hi, good afternoon. I anyway wanted to discuss financials with you because there's too much of hectic activity going on. First, tell us the companies which have already seen deals, banks or NBFCs, whether it's a Yes Bank, RBL Bank, Federal. I mean, as an investor, what does it make you think now? Do you think that over the coming few months there is a case for a re-rating, or do you think it's more or less played in the price? RBL Bank, practically at lifetime highs. Yes Bank from the lows of 16, 17 rupees, it's already at 22 rupees. So how should investors look at these entities where the deal is either brewing or has just been announced?
So broadly for the banking space, if you look at it, our expectation was that from Q3 onwards, the NIM should bottom out and we should start seeing some recovery. So if you have close to 10-12% loan growth and some expansion of NIMs, then we were probably building in 13-14% NII growth for a lot of these banks. Now, what the consensus is starting to build in is that there could be another 25 basis points of rate cut as we move in December. And if the 25 basis points rate cut does come in December, then probably the NIM recovery will get prolonged to Q1 FY27, and you will still have flattish to 2-3 bips NIM decline for these banks, even when they report the Q4 earnings in that sense. However, having said that, a lot of these banks in terms of valuation, because the fact that, we have had time correction for the last 12-15 months, and earnings have still grown by 10-12%, meant that, in the case of RBL, it had come down almost to one times price to book. And given the large capital infusion that has happened, good parentage coming in, clearly, it's multiple re-rating that is happening for these banks. Similar is the case for Federal. It had come down almost close to 1.3 times, and earnings were largely in line. So Q1 FY27 onwards is when I think these stocks will again start showing PPOP growth of closer to 13-14%. Next 2 quarters could be similar to what we have seen in Q1 and Q2 in terms of, high single digit to low double digit pre-provisioning profit growth. But clearly, I feel that on dips, these are some of the names that one could look to add from a 12 to 18 month perspective.
Okay. All right, Nikhil, got it. Thank you very much for the conversation today. Good to get that perspective from you. Well, that's a view from Novama. Market right now still 70 points lower. We're at 3 o'clock. So the expiry is going to play out. Let's go across to Nigel. Nigel, what's the latest? What do you make of it on looking at the F&O screen?
Well, it's a typical expiry that's playing out, Surbhi. And just take a look at the way the markets have actually recovered in the last few minutes or so. We're closer to around the 25,900 odd mark. At the start of the show, we were wondering whether or not the 25,800 mark was in a bit of a risk. Now, I'll tell you what, this is the best series that we have seen since June 2024. And it's a series that's a little better than the series that we saw earlier this year. That was March 2025, provided we end around these levels. So we have gained close to around 5%. This series goes to the bulls. Well, look at the options data. The 25,850 call, 25,900 call, both of them seen a good amount of open interest build up, and the premium has come down out there as well. And on the downside, the 25,850 put, well, that is fairly active. So the broad range you're looking at is, yes, the Nifty has defended the 25,800 mark. But if in the next few minutes we can get past the 25,950 mark, then we can see a big spurt on the upside. For the time being, the bears believe that they got covered, and that's why the expiry band is at around that 25,800 to around 25,950 mark. Couple of stocks that are coming to focus and a couple of underperformers actually. Suzlon is moving with good amount of traction. There's a big open interest build up as well, particularly for the next series. You also have UPL, another underperformer that's corrected from the top. Both those two, there are signs of fresh buying on both those two stocks. While Hindustan Zinc, a stock that did very, very well, when silver prices were strong. Now precious metals, they've corrected a little bit, and Hindustan Zinc is seeing unwinding of long positions, and there is some short build up as well. So keep an eye out on that one. In a matter of few sessions, that's corrected more than 10% from the top. Back to you guys.
Okay, all right, got it. That's the F&O queue for now as the expiry plays out. Let's now revisit those TVS numbers that were looking actually fairly decent. But margin expansion, the EBITDA growth was as high as 40%, I think, year on year. So Darshan's here with the breakup. So how's it looking?
So highest ever quarterly revenue, highest ever EBITDA and highest ever profit before tax. These are the numbers for TVS Motor in Q2 FY26. All the headline numbers have seen a healthy growth. Against expectations, these numbers are largely in line, and margin has come in line despite an increase in the raw material costs. Raw material costs have seen an increase of almost 30% year-on-year. But good part is, it seems like that company has taken a price hike that has helped an increase in the realization, which has increased by 5% year-on-year against our expectation of 4% sequentially, and on year-on-year, and on a sequential basis also it's flat against expectation of a downtick of in the range of 1 to 2%. And revenue growth that you are seeing of 29% is largely on the back of healthy volumes that company has reported. Both on a sequential basis it was up 18% and year-on-year is up 23%. But as we have been saying that for Q2 FY26 for automotive sector, more than the numbers, what will matter is the commentary, what exactly company talks about the trend that it's been seeing in the festive season, and if there is any increase in the outlook for this sector for FY26. As of now, for two-wheelers, the growth outlook is of high single digit.
Okay, all right, got that. Thank you very much, Sud, for the details on TVS Motors. Have to take a quick break, come back on the other side, and then, of course, as always, check on all the dealing room chatter of the day, and then some final trading calls coming up with Mitesh.
Welcome back. Well, a typical expiry playing out here. You know, at around 2:30 p.m., you thought that the 25,800 mark was at a bit of a risk. Just take a look at the recovery that we have seen. The bulls are fighting back. The series goes to them. And I'll tell you what, if they can get another quick 20 points, then we can see a bigger move on the upside. Because as of now, positioning is 25,950 mark does hold out. That said, let's turn our attention to D3 chatter. Nimesh joins us to tell us what is he picking up. Nimesh, what are you picking up?
As expected, it was supposed to be a volatile day of trade. Yeah. It is turning out to be a volatile day of trade. But within that, I guess there is selling pressure today. Maybe it's the expiry factor, but apart from that, there is an MOC sell basket at leading FIS. So maybe that'll play out in some stocks today. The sector clearly belongs to metals names today. A lot of steel stocks are buzzing in trade. There is a bit of buying as well in the metal stocks, especially the steel names. And the index is up 1%. But I guess for the November series, the fag end of the earnings season and the Indo-US deal, these are the two big events to watch out as far as the big triggers to watch in the November series. So that's going to play out. But I guess today the volatility is largely on back of the expiry.
Okay, all right. What about individual stock, Nimesh? What are you picking up?
Well, so the first stock on my list is Glenmark Pharma. That's been under pressure of late. In fact, from the recent high of almost 2,100, now it's back to 1,800. But now I understand there's going to be a large block deal in Glenmark Pharma very soon. A leading FIB holder is the potential seller, and it's likely to be a clean-out trade. But that's a large block expected in Glenmark very soon. So that's the first name. The second stock is Indus Tower. As we speak, the con call is on. The management has clarified on some of the stuff. But in general, I believe some larger HNIs have turned active buyers in Indus Tower, especially after the big clarity on the AGR from the Supreme Court. So that's buzzing in trade. A couple of stocks where there is MOC selling, Inox Wind as well as NTPC. Both stands out. The stock's not reacting on the negative side, but I understand there is MOC sell flows in both those names today. The last is Bank of India. Within the PSU bank names, Bank of India stands out today in terms of very aggressive buying. So I'll be watching out for the delivery stats very closely. Looks like there will be delivery-based buying in Bank of India today.
Nimesh, with Glenmark, if you have... So if you remember, there was that, I think it was the out-licensing deal, right?
Yeah.
And the stock had gone up 19-20%. Price is basically, I think, around back where it was before that deal, right?
Yeah.
And
so
now there is this...
It's almost corrected 10-11% from the recent peak of 2,100. So back to where it was. Again, one large FI seems to be selling out completely, so there's going to be a large block. And also there is a bit of a concern of a potential write-off in Glenmark Pharma. So that's a key concern on back of which the stock has underperformed as well in the last many weeks.
High was, that's the thing, 2284. So almost high was 2300 in July. So that was the big high which was made after that deal was announced. And now, of course, it's back at about 1800 or so. That's a one to watch out for. So block, large foreign investor. Likely seller. Anyways, thanks very much for that. We'll track some of this stuff. Mitesh is back with us with what to trade in terms of, short-term trading ideas. Mitesh, what do you have?
BTST and mortgage property in the 2284 for targets of 2325. And the other stock, which I like, is Bank of Baroda. PSU banks are doing well. So Bob is a BTST with a stop at about 274.90 for targets of 80.
Thank you, Mitesh, for that. Let's go across to Manisha. The big story today was the outage at MCX. It lasted for more than 4 hours. Now trading, the website is up and running. The platform trading is resumed. But Manisha now joins us with what she's learned, the latest. Manisha.
Well, thank you for that. Yes, we have the latest coming from the exchange where they have said via press release saying that the trading was delayed because of the tech issue there. Also, operations are now shifted to disaster recovery side. They also say that the systems are functioning normally, but that is only since 1:25 p.m. Remember, the exchanges are expected to open at 9 a.m. and especially when it comes to commodity derivative exchanges, they are open from 9 a.m. to 11:30 p.m. So we've lost nearly 4 hours and 25 minutes of a trading time at a time when you are looking at a very, very volatile commodity markets there. We've seen quite a bigger sell-off come in case of precious metals, volatility also seen in case of base metals and energy as well. Interestingly, MCX caters to 98% of market share when it comes to commodity derivatives within the Indian space there. What MCX also tells us is that the probe is initiated on a priority basis and they are identifying the cause and implementing corrective measures for the same as well. Though MCX has not given any more details onto this one, but we've been talking to various people since morning, and sources tell CNBC-TV18 that MCX did face a problem actually with a trading system gateway, and that is the reason. That is when the exchange decided to shift it to this disaster recovery management, and that usually takes time and is the reason you took a very long time today as well. But usually this is back in a couple of hours. It took 4 hours and 25 minutes for the exchange to come back today. Well, the expectation also is that the exchange at some point in time will be writing to SEBI as well. Remember, there are SEBI guidelines on technical glitches and what you really need to do, and in sense of the disaster recovery system as well. So those details are still something that the markets are anticipating right now. But we have spoken to some brokerages as well, and they say that until 1:35 or so, there were still some problems with bid and ask and overall orders going through. But at this point in time, the functionalities seem to be quite normal. And this is not the first time this is happening really, but this is definitely the first time that we have seen exchange shut for such a long time. Before this, it was in July 2025 when we did see exchange start delayed by an hour, 10 minutes. And before that as well, it was in 24 and then 2017, 2018 as well. So there have been various instances. But currently, what seemed to have happened today is something that is clearly not going unnoticed at a time when the volumes have been hitting record highs, at a time that MCX just yesterday launched options on its bullion index. Quite critical, and 4 hours and 15 minutes. 4 hours and 25 minutes is pretty long time. The brokers also tell us that 15% of trade happens in the first 1 hour, and nearly 20 to 25% of trade would have happened in a time when the exchange was just not about functioning.
Manisha, so what caused the outage for 4 hours plus today? Do we know that?
We don't have the statements from the exchange itself, Prashant, but we do hear from sources, and this is to CNBC-TV18 saying that MCX did face a problem with one of its trading system gateways. Remember, there are 4 gateways to a trading system, and one of them went down is when the exchange perhaps decided to go on to the disaster.
But Manisha, the disaster recovery side should come up automatically, right? It's like to give an analogy, a poor one is like an automatic generator. Power goes off and the generator kicks in, right? It's supposed to be seamless.
It is. But when you move like that, it's sometimes slightly delayed. And I absolutely take your point in, Prashant, because when you go to the disaster recovery system, and if that takes 4 hours, I'm assuming that MCX will have to do a lot of explaining to SEBI as well as they write to them.
Yeah, that's right. Thanks a lot, Manisha, for that. I recall the NSE had their backup site on at Chennai, because it had to be on 2 separate coasts as well in case there was any calamity. And that's why they used to keep testing that. Well, the markets, that's the big story out there. When I just did the FNO check, I was telling you all that if the Nifty can get past this 25,950 odd mark, we could see a bigger spurt. It's just happened right now. And the Nifty Bank is the one that's leading away. So those call writers that were bracing for that 25,950 mark holding out, well, they're going to be in some trouble because we have close to around 11 minutes to go out here. So just keep an eye out on the screen. Let's get in Jay Bala, though, of Cash the Chaos, who joins us on the show. Jay, every time you joined us, you said you believe that the markets are consolidating and bracing for a bigger move. Let's revise those levels. Where is the Nifty headed, and the time frame as well?
Hi, Nigel. Thanks for having me on your show. See, the only real resistance for Nifty now is at the all-time high of 26,277. The recent high I saw at 26,104. I think that's not the final high. At least a test of 26,277 is coming in the short term. And as I've been reiterating since April, the Nifty in the medium term is heading for 29,000. There's no change in that. So from a very short term perspective, I think Nifty is unlikely to print 25,330 if my thesis that 26,277 is getting tested. And it's quite possible that the low of 25,700 and change that it saw a couple of sessions ago, I think that itself might hold, if not 25,550. And from 25,550, I'm anticipating fresh 52-week highs, fresh all-time highs to come through for the Nifty.
Right. I think point taken and levels taken, Jay. Good afternoon. Take a quick commercial break. Stay with us, Jay. Coming back with more questions. There's 9 minutes to go for close. So a quick break. Right back.
Welcome back. Well, a couple of stocks actually are moving well. TTK Prestige came out with a good set of numbers. Not an apple-to-apple comparison, but Stovecraft that comes in from the same space, that stock, in fact, has seen a big volume spurt, and the stock actually has moved to the high point of the Razor Street for the time being. Seems to be betting on the industry itself doing well. So let's see whether it plays out. Pricing range is very different as well between both these two companies. But for the time being, Stovecraft at the day's high as well. Jay, it's a market that you want to know about stocks, and I believe you've got a couple of stock trading ideas for us. So help us out with two names at least.
That's right, Nigel. I like the OMC space, and I also, in a related space, I like the Kirloskar Oil stock. I had given this call on Kirloskar Oil in September. Today's move is a breakout, and I'm reiterating that call. It's heading to fresh all-time highs. And the new fresh call is on HPCL. The stock is possibly heading to 495. This is a short-term call. A stop loss of about 430. And the next one is Bharti Hexacom. Bharti Hexacom is breaking out of a inverse head and shoulders pattern, and a stop loss of 1720 with an objective of 2080.
Okay, all right. Stay with us, Jay. We just need to explain to our viewers about that story that was flashed for you on the screen with regard to IIFL Capital and some possible funds that are interested, or a PE that's interested. Yash joins us to fill us in with what he's picking up. Yash?
Well, that's correct, Nigel. So what we've been given to understand from our sources is that IIFL Capital is looking to get a big strategic investor in the company. What sources tell us is that TPG Capital, the private equity giant, is leading this race to acquire about 19.99% when it comes to IIFL Capital. As far as other contenders are concerned, sources also tell us that Bain Capital still happens to be in the same race to acquire that stake in the company. According to our sources, this deal could be valued at about 2,500 crore rupees. Now, as far as IIFL Capital is concerned, it is currently, involved in the businesses like institutional retail, broking, wealth management, and financial product distribution. We've written to all parties involved in this particular transaction. TPG Capital has said that they won't be able to comment on this official query from CNBC-TV18. IIFL Capital, the response from them still remains to be awaited. Same goes for Bain Capital.
That's IIFL Capital. One more deal perhaps in the making as far as the financial services space is concerned. Yash, by the way, that's a fancy looking gadget. It's an iPad, or is it one of those reading devices?
No, it's just a phone. It gets difficult to read the minute font, so it's just a larger screen to read that.
That's Yash's Diwali gift, I think, to himself.
No, it's just dry fruits. Diwali gifts are just chocolates and dry fruits. This is not.
Fold it for us, Yash. Now it becomes a phone. Magic. All right, thanks, Yash, for that. IIFL Capital in focus. That's an exclusive story, and we will track this one as and when it comes to fruition. Jay is with us. Jay, did we do stocks with you?
Yeah, we did, Prashant.
Okay. What about global markets and global indices? Anything really stands out? Metals, for example, is something Nigel has been highlighting. Steel has been doing very well. The one commodity within the metal space which is making new highs, I think copper is almost $11,000, right?
Yeah.
So that's the most bullish sort of base metal out there. Almost a consensus on very few individual stocks which give you that exposure. There is that Hindustan Copper, but maybe too many issues. But what's your sense here?
Yeah, I've been bullish on the Indian metal space, and I've been pointing out, along with autos, metals were likely to hit fresh all-time highs, and they've already done that. And you're talking about probably manufacturing copper. I'm going to be referring to COMEX Copper. COMEX Copper is probably completing a short-term bump up, and the sharp fall it saw in July, that's likely the start of a major trend, and COMEX Copper is likely to drop to somewhere up to about April 2025 levels. So watch it. There is a possible sharp reversal due if there is a print of 4.8 on COMEX Copper. Wait for the confirmation to come through. If that comes through, COMEX Copper is likely to fall sharply. When it comes to the Indian markets, metals, the Nifty Metals Index is still looking quite strong. 10,000 is likely to offer support for it. When it comes to the and then it likely to head to fresh 52-week highs. And when it comes to the global metal space, the precious metals complex have clocked a significant top. Silver is likely to drop to at least 41, and spot gold is likely to drop at least to 3,400.
Just a quick word on gold. Does the correction extend itself, or do you see a bounce? What's the level on gold?
In the very short term, we could see a bounce. When I say very short term, from a 1 to a 4 day perspective, that could be a bounce. But the high it saw just before Diwali, that's possibly a significant high. We need further evaluation and evidence. But as of now, it looks like this is for gold and silver. We could be looking at the start of a multi-week to multi-month correction. The minimum I'm anticipating for spot gold is 3,400. Even if it's a bullish case. Again, silver, there are two possibilities. One, a very bullish case, and one, a very bearish case. We evaluate as the market goes forward. But in both these situations, I'm anticipating silver drop to about $41.
And sorry, I missed gold, Jay. What are you anticipating level?
At least 3,400 on spot gold, London bullion gold.
Which is now 4,000.
It's not today. It printed 38.86, and I got late to the market as I was trading.
Were you trying to trade on MCX or no?
I trade on COMEX gold.
COMEX gold. Okay, got it. Jay, stay with us. We're going to come back with you on markets forward in just a bit. Allow